Hello and welcome to Metpro Group's review of 2021. I'm joined today by Mark Fiddy, our Managing Director.
Hi Jake.
And what we're going to be doing is talking through some of the more salient points from 2021, what we've seen, how these have impacted the industry and of course our customers, and also what we're expected to see as we move into 2022. Ready?
Ready.
Let's get into it.
Let's go.
Okay, Mark, so let's start with 2021. It's been a really strange year, but a bit of a challenge for you. How would you sum it up and how do you think Metpro's performed?
I think it's a very interesting time for all of us really in this industry. I think comparing it to 2020, obviously 2020 was a bit of a horror show, the whole of the COVID environment and everything we saw going on there. So in terms of comparison for 2020, I think it's been a far better year, certainly for Metpro. In terms of revenue growth, it's been strong, but we've also seen quite a lot of product inflation, freight increases have made a massive difference to product cost. So we'd all expect to see revenue growth, I would suggest. The things that are really important to us are things like the number of pieces sold. So are we selling more volume rather than just value? And we are. And that's a great reflection on what we're trying to do as an organisation. We're definitely dealing with more customers than we were, so our live trading accounts are up. So they're all the positive signs. The negative side of it, really, the ongoing cost management and being in control of our costs, having people at work, getting people to turn up with a PCR flow tests every 5 minutes is not great. And probably the worst thing we're trying to deal with is the margin pressure and managing the costs and the product costs and trying to be fair with our customers.
And a big milestone for Metpro came in July of this year where we acquired a new business, Cato. Can you just talk us a bit around that?
Yeah, sure. I mean, Cato for us, we've been the manufacturing partner of that organisation since its inception. Does it fit with us? Absolutely. It's all about innovation, adding value to generally commodity products. So we saw that as a great opportunity to grow, not only through the range of innovative products, which at this moment are Conlock, roller tray and rapid saddle, but we have quite a strong manufacturing base, obviously, and we see that as a vehicle to move into different areas. It gives us different capacity and different opportunities in manufacturing. We're going to invest heavily in it. We're going to put more people into that space to create demand, to create specification, and hopefully add value back to our customers.
Can we talk about shipping in 2021 and how we see this moving forward in 2022? It's been a very prominent issue, and you could say that aside from COVID, this has been the root cause of many of the challenges we've seen in the past 12 months.
Absolutely, and for somebody who's a massive importer from Asia and over the globe, to be perfectly honest, it's a massive impact on our business. So I think we can put this really into 4 key areas. I think we can put it into the whole demand outstripping the capacity that's available through the networks, the delays that we're seeing, the challenges of getting space on vehicles, booking it, and obviously the outlook, where do we go from here and what are we going to do? So if we take those individually, if we take about the demand and the impact of the demand, we're seeing and continue to see equipment shortages, i.e. not enough containers in the right places. It's been all over the news recently, trying to repatriate the right size of containers to the locations. That causes difficulties. Getting physical space because the demand is so strong, the consumer market's recovered, everybody's shipping. It's been really difficult for us to book spaces and it's taken a lot of time. With the opportunities that the operators see, costs are going up, so they're charging a premium. We used to forever have a view that we'd have a month's worth of rates, so we'd have a rate for a month. That disappeared really in November 19, and now we're talking about a 10-day window maximum to book a slot. By the time you book it and get it on the vessel, the price has gone up. That's really challenging. Then we talk about the delays that we're seeing. So we're seeing port congestion everywhere. That's not very helpful, especially when you're waiting for containers and they do arrive and then they do manage to get them landside and you're paying demurrage on the product. It's not great. So that congestion's a difficulty. A relatively new event that's really causing challenges is we used to have 32-day shipping really from particularly China to the UK port. What we're seeing now is in order to repatriate all of these containers, vessels are stopping far more. So instead of it being 32 days, it's more like 60 plus days. Well, that 60 plus days gives us more wet pressure on our working capital. We have to carry more stock. And it puts us at risk of being out of stock. So again, those delays are really challenging for us. Trying to get space, the booking of containers, we've never used so many freight forwarders and directly, and it's all about what's available at the time. And we've decided and made a decision that for us, it's about having stock. So we are prepared to pay a premium for the space on the vessels to bring them here. Ties in with our whole offer to our customers. About 98% availability is what we're trying to achieve, 99%. And I think the work that we've done, in testament to the team here, we've worked very hard to make sure that we get the space. I don't always like the rates we're having to pay, but we've always got stock. And I think that's a big message moving forward, and that will continue to be a challenge.
And just to add to that as well, to offer an extra level of transparency to our customers and their customers, on our website, Metpro Online, all of our stock levels are readily available 24/7 without the need to log in.
Absolutely, you can see stock. There's no point in us having the stock and not telling people about it. Our web offer, we're looking to expand. We do see the digital world growing, and I think live availability, particularly as we move into 2022, is going to be as important as it was in the middle of this year.
And in terms of COVID and the pandemic, is that having an impact on shipping?
Absolutely, it's had an impact on shipping. Obviously, back in November 19, we were seeing Hubei province, the start of the COVID world, and what we understood there. I think the vaccination program in the UK has been fantastic. A lot of people getting back to work, a lot more confidence in it, double jabs, triple jabs, great thing. What we don't hear so much of is the impact of COVID still in China. So we see a lot of activity around, certainly the ports, where there's outbreaks of COVID. Ports have closed. Ningbo was closed recently for 10 days, pretty much. So we're still seeing and feeling that impact. And we don't hear it so much in the manufacturing process itself. It tends to be more around the ports and the shipping process. But it's still real. And again, it's all about when the world gets vaccinated, hopefully we'll all be in a better place. But short term, we've got to live with it.
A major milestone for certainly the UK was Brexit, which obviously was 1st of January 2021. Mm-hmm. What kind of impact do you think that's had on our industry, and how do you see this moving forward?
I think it depends where you trade. Obviously, duty rates are changing and have changed, some for the better, some for the worse. I think that the impact that we thought we were going to see as an organisation was nowhere near as bad as we thought it would be. I mean, as you know, Jake, we import and we export. So we export into Europe, we export across the EU now. Not being part of that has been more challenging. I think one of the things that we didn't perhaps realise was the amount of paperwork it was going to produce. That's certainly been interesting, commercial invoices, and getting our people to understand that and what we needed to provide to make sure it happens. Understanding tariff codes has obviously been a part of our business, but not a wider part of our customers' understanding. So helping them along with tariff codes, what they actually mean, how they're going to deal with that. And the understanding and trying to help our customers understand what it actually means to them. We had some great examples of, particularly in Ireland, Southern Ireland, in the Republic of Ireland, what was going on there, where we didn't think there would be duty in certain product areas, third-party tariffs that are now coming through, third-party country tariffs, getting people to understand that, explain it, and for them to be able to pass the costs on to their end customers. So the costs that we will have to incur, their legislation in effect. So I think that's the biggest challenge. In terms of it settling down, maybe there'll be a bit more friction across some of the northern southern border in Ireland early next year. We'll see where that goes. And in terms of border control, where we used to ship a product from the UK 2 to 3 days arriving, we're now talking about far greater delays. So we've had experience of up to 14, 20 days to get products from the UK to Northern Ireland, mainly because of the border controls that are in place.
And as a final part to the Brexit conversation, another challenge that we're now facing is EU safeguarding. What does this mean to us?
Okay, relatively new phenomenon, and it's about the European community trying to get away from countries outside of the community selling low-cost products into it. What does it mean to us? Steel products and a number of steel products are now restricted. What that actually means is there's a quota, and this quota operates on a quarterly basis, January to the end of March, 1st of April, moving forwards. And it says this is how much steel of a certain type of product can be imported into the European community. It's been in place for a good period of time from the UK perspective. We really probably missed our export into the Europe piece. What that actually means is there's this 3-month window that should be enough product over that 3-month period. That's been exhausted. I think in the first quarter, which was July to September, that was exhausted after 6 or 7 weeks. And then from October to December, it was 5 weeks. And what that actually means is every product that you ship after that period of time incurs a 25% additional surcharge, which you pay at port and you cannot avoid. So I think from our perspective, it's now a case of we look at it daily as it gets towards tighter on the controls and weekly at the start of it. We're trying to inform our customers of the safeguarding measures. This is back to the where can we add value to our customers and to make sure that they ship their products at the start of the quarter and not at the end of the quarter. It does mean for our customers that they probably will have to carry more stock than they'd be comfortable with or incur the 25% penalty. Not something we can change. I don't know how long it's going to be in place for, and I think we live with it until we know more.
Okay, so as a bit of advice to your EU customers, speak to our team about your requirements and we'll help you as much as we can.
Absolutely.
A couple of key topics that have been prominent issues throughout this year, and in fact so prominent that they've been at the top of recent EDA surveys, are stock levels and pricing. Big issue. Can you take us through what's going on?
It's just a nightmare. It's an absolute nightmare. So you've got lead times changing, pricing changing, shipping changing, availability changing, COVID in Asia, COVID in the UK, COVID in Europe, manufacturing is all difficult. What the hell do you do? We took a very simple approach. We looked at this and said the most important part for Metpro is to make sure we have availability of product. And I think in some ways that's helped us. It certainly helped us to service our customers. There's very few items that we've been out of, and if we've been out of stock, we've been out of stock for a short period of time, not for months on end. The challenge that we've got is managing, well, how much stock do you bring in with a very high freight rate, which you're in danger of potentially being uncompetitive with, and what do we do with that? Unfortunately, you're at the hands of the market and you're at the hand of the forwarders, anybody who imports products in the same place. So over time, the freight rates will all normalise, so we should all be in a similar environment. What do we want to do about that? We continue to commit to stock. Without it, we have no business, our customers have no support. We're trying to manage it in a very fair way, I think, with our customers from a pricing perspective. As soon as we get a price increase, we don't pass that straight through to our customers. What we do is we burn the stock that we've got at the old price, and only when we get onto the new stock do we charge that through. We always try to give notice periods. Historically, we've always been a month's worth of notice, at least for any price increase. That's been more challenging over the last few months, but I think the least amount of notice we've given anybody is 2 weeks. So I think we're trying to be fair with that. How we move it forward, Jake, I think we just have to be really understanding of the customer's demand and what they want out of this. We're also trying to forecast a pretty strong 2021 overall with strong growth. So how much more do we need to manage? It's the working capital story as well. But in terms of stock, I think the assurances I can give is we will always have stock. We might not always be the cheapest price at a moment in time, but over a period of time, I'm sure we'll be competitive and will remain so. We're doing our hardest to work with our suppliers to try and enhance wherever we can.
Moving closer to home now, back in May of this year, we saw British Steel close their order book. What happened there?
Purely capacity. Too much demand, not enough space, them not really understanding what their pipeline was going to look like, and they closed the order book. And as most things happen there, that passed through to price increases. Price increases came through into the market. The stockholders who did have stock put their prices up again, and that was passed all the way down the chain. I think the real impact of that was felt on large projects where there was commitments that were made that couldn't be fulfilled. Price holds were no longer price holds and everything passed through. And I think certainly main contractors and some of our distributor partners had difficulty around that model. Not sure where that's going to go. We'll have to see where it lands. Steel did tuck down a little bit. It's now back to a raising level again as we do this interview, Jake. So I think let's keep a watching brief on it and see where we go from there.
So as we move towards the end of 2021, Chinese New Year is fast approaching. How do you see this period affecting us in 2022 or the industry?
I think Chinese New Year is a difficult time for all of us in this industry. It affects us all in certain ways, not just in our business lives, but in our personal lives, because so much is coming out of Asia. I think the official Chinese holiday is 7 days. For this year, it's for 2022, 31st of January till the 6th of February. The reality is it's never 7 days. So if you think about the number of people that are trying to move around China, they get a week, but invariably it's 7 days to get there, a week at home and 7 days to travel back, because a good number of people travel over 2,000 kilometres to get there. Congestion's a real nightmare. So I think we've always had that difficulty. I think this year is going to be especially difficult. There are a few things that are slightly different this year than they were last year. So the Chinese government are now regulating energy output. And we're seeing the difficulties coming from that already. So I can give you a view of some of our manufacturing facilities at the moment. We've got some that are working for 15 days and then have to take 15 days off. That's not conducive to great output. We've got some that are on a pure 4-day week and can only do 4-day weeks, and some that can only work in the evenings and limited hours, 6 to 7 hours in the evening. What does that mean for us? Well, output's going to be restricted. Lead times are going to increase. Costs are going to go up because they've still got the OPEX of the people, but they're not getting the same level of output. So I think we just need to be mindful of that. We've planned all that. We've been away to wherever. We've got our own people in country, so we're very close to the action there. When it comes to the things that we don't really talk about, I always think that when we get towards Chinese New Year, we need to be really mindful of our quality, which is a big part of our offer, as you know. We spend a lot of time in quality control. Our guys in country are all over it. But when it comes to Chinese New Year, they're all trying to push everything out the door before they leave, because nothing sales in that period at all, so they want everything out the door. We always find we have more failure rates as it comes towards Chinese New Year, and we're really mindful of it. So we've got greater activity in there than we've had previously.
So let's look ahead now to 2022. What do you see happening as we move into the next 12 months?
Okay, we're in budget process at the moment for our own needs and requirements. What do we see? I think we're going to see a bit of a hiatus at the start of the year. Things taking a time to get back to normal. We've talked about Chinese New Year and that impact. I think as we start to get into the second quarter, it'll look a lot more positive. The public purse will be released a bit more. We will see further cost increases. I'm absolutely certain of that. I think we might see a slight decline in raw material costs, but I think freight will compensate it. So we're not looking for a significant reduction in terms of price in next year's budget. I think it's still going to remain very challenging. I think the vaccination program has been absolutely fantastic and handled in a superb way. I think getting people back to work, a bit of confidence. We get the Christmas period over, which I think is going to be difficult. People back to partying is always going to create a few issues. But I think once we've got that back to normal, the public purse, as I said, will really help. I think there's a few small things on the horizon. The crane index in London looks really strong. New builds are starting again. Commercial work's resuming. I think that's going to be a positive sign for us all, which I certainly hope is going to be the case. I think the big message for us and for our customers, we want to stay really, really close to our supply chain, but we want to stay even closer to our customers. Understanding their demand, understanding their trends, making sure that we're catering from the spikes in demand or the decreases, and to make sure we can provide the service that our customers would expect.
So a few challenges ahead, but cautious optimism.
Absolutely, absolutely, Jay. Okay, Jay, time for me to reverse the questions really then. So the recent COP summit, environmental issues, carbon neutrality, highly on the agenda. We're starting to see that from our customers requesting more information. What are we trying to do as a business to try and combat that and improve our current position?
Well, this is a major topic of discussion at the moment. It's an ever-growing conversation. And naturally, as a manufacturer of metal products working as far as the east of Asia, we're going to have quite a large carbon footprint. It's something that we're actively working on now. We're in conversations with several different potential partners, and I suppose the fairest thing to say is expect to see a lot more from Metpro in 2022 and beyond.
Okay, I think that's right, Jake. We do need to move with that. I think we're trying to get company vehicles at least into the electric world. I think there's a lot we can do there, so I look forward to further updates on that.
Well, Mark, thanks for your time today. We hope this has offered some insight. And of course, if you have any questions about any of the topics raised today, please contact our team using the contact information at the end of this video. Thanks for watching, and we'll see you in what should be an interesting 2022.